Feeling like you're not having enough time to analyze deals and move through and really build up your portfolio? Well, in this video, I'm going to share a very quick tool to help you analyze more properties faster. Coming up. Hey there, it's Billy with Keep On Cash Flow, helping you to grow your money and your mindset so that you can get closer to the lifestyle that you really want to lead faster. Now, on this channel, we'll be sharing weekly tips and strategy videos just like this. So if it's your first time here, you're going to want to consider subscribing to the channel. And you're going to want to make sure that you check out the links and the comments in the section below, because week after week, the comments are even better. But as for today, I want to share with you very quickly a tool that's going to help you get through more deals faster. You see, one of the things that I used to do when I got started in real estate was I would spend a lot of time analyzing specific deals. And by the time I figured out whether or not it was actually the right deal for me, it was too late because the deals were already off the market. And I don't want that to happen to you. So what I'm going to do is share a rule, which is the 1.5% rule. Tell you a little bit about what that means and also help show you why it will help you get through more deals faster. So first and foremost, this is something that's going to save you an amazing amount of time. Like I talked to you before, you probably are in a situation where you've spent and you looked at what are the gross scheduled incomes, and then you look at all the different expenses and you try and figure out if they're absolutely right or not. And then afterwards, you have to figure out how much money you're going to then deduct for debt service or your mortgage payment, and that will show you how much money you're actually going to have left, and then whether or not it's going to be enough for you to actually invest in the deal. But I'm going to show you something that's going to help you do it that fast. And this is the 1.5% rule. And especially, this is really important for those of you that are like me, that are really interested. Your objective is cash flow. I love doing this with multifamily properties specifically because I'm long distance, and this is one of the best ways to help me get to the deals that actually make the most sense. And then once I understand those, then we will focus on the due diligence process. But let me give you an example. What do I mean by the 1.5% rule? So let's imagine that you go out and you find a property, and that property is worth $1 million or 1 million euros or whatever your currency is. So what you're going to do is you're going to take that 1 million, which is the purchase price, and you're going to multiply that by 1.5%. So if you buy a building that is 1 million euros or dollars, and you multiply it by 1.5, that's actually going to give you 15,000 euros or dollars per month in terms of gross scheduled income. So that's actually the money that's actually coming in from the rents or from any other sources of income. So as long as that $1 million property is creating $15,000 per month in income, then that's the first checkpoint. That means go ahead and continue doing more research into the property, right? And the reason that that's important is, imagine that you go out and you look at a building and it's 1 million, the same thing. And when you do the 1.5% rule, you figure out that property is only capable of generating $8,000 a month. Well, chances are, if you're focused on cash flow, you know that this isn't going to meet your criteria. So why waste more time in figuring out the expenses and figuring out the debt service? It's just a waste of time because there's not going to be enough money in this particular property to help you get to your cash flow objectives. So, or you may do the same thing. If you look at $1 million property, you do the 1.5% rule, and you figure that it actually generates 20,000 euros or dollars per month. You know that you probably need to go super fast and get the offer in and get it accepted, because it's an absolutely, it looks on paper like an amazing opportunity. And a lot of times today, people talk about a 1% rule or a 2% rule. And at the end of the day, that really just shows how aggressive or conservative you want to be in your approach. And when I say aggressive, meaning maybe your cash flow objectives are you're going for lots of volume, so you want to be more aggressive. So you may use a 1% rule where you say on $1 million property that you only need 10,000. And that will meet your goals. Or you may be more conservative and you want to use a 2% rule, and you say on that 1 million property that you need to be able to minimum generate $20,000 per month. So it's really up to you, and I wanted to help you understand, one, it's a way to help you very quickly know whether or not you want to spend more time on the opportunity. I wanted to also help you to understand what is the difference between more of an aggressive approach, which would be closer to a 1% rule, or a more conservative approach, which would be more like the 2% rule. And at the end of the day, you really need to be able to understand also how you manage your operating expenses as well as your financing expenses. And that's going to help you become much more profitable. So basically, I like to leave you always with the question of the day. And my question today is, now that you know more about the 1.5% rule or the 1.5% rule, how are you going to be able to use this rule to go out and get more deals? Love to hear your comments in the section below. As always, this is Billy Keels with Keep On Cash Flow. That's my 2 cents for today. And as always, hasta la próxima.